I was worried actually that there was going to be a picture appear on there, so thank goodness it's just my name. So thank you very much, Susan and Sharon, and let me extend a welcome to you to Scotland and your colleagues. It's fantastic to have you here, and great to be sharing the stage this afternoon with such a rich and varied set of subjects to cover. So very much looking forward to it. So my name is Mackenzie. I lead Deloitte's FinTech practice here in Scotland. I work with a number of clients, predominantly in FS, around looking at how they incorporate new types of FinTech technologies into their business. We also do a number of other really cool things. We create and build product. And you'll hear a little bit later on this afternoon from Ross on one of those products that we've created on the blockchain. So very, very excited to be talking here today. What I wanted to do this afternoon was essentially do three things in this opening keynote. I wanted to take a quick canter through a timeline here and just kind of give us a bit of a sense on how we got to where we are today. And let's remember that actually blockchain is still fairly in the foothills of its development. I think if my maths is right, we're probably only 8 years or so into this journey. So there's still a huge amount to come, and we're really, I think, at a point now where we start to see a tipping point from concept into real proof of concepts and viable products. So I'll step through that timeline. What I also want to do is level set and demystify here a little bit. So I want to just offer up what I hope is a fairly clear and digestible definition of what blockchain is. And then the third thing I'll do is step a little bit into a couple of use cases. I don't want to steal any thunder from this afternoon, but what I do want to do is just give a sense of the sort of scale and spectrum of use cases that we start to see coming out in this space. What's very clear to me is that, and Susan touched on this, that undoubtedly we're at a bit of a tipping point. There is a huge opportunity for this technology, and I'm certainly extremely excited to see what that brings and how that evolves in the coming years. So, if you'll indulge me for a little bit, let me step back in time a wee bit. Now, hopefully, you can see what's on the screen here. But I wanted to give a sense on where blockchain came from, and essentially what the heritage of blockchain is. But let me step back a wee bit earlier. You'll remember. Many of you in the early 90s, the creation of the internet and the phenomenal impact that has had in the world. So Tim Berners-Lee, undertaking a number of scribbles during his time in CERN, ultimately led to what we see as the creation of the digital world today. And in many ways, that paved the way to enable us to view the world very, very differently and start to think about the different types of opportunities. It created entirely the whole concept of connection and digital interaction and how it could materially change the way that we interact, how we do business together, and how we, frankly, share our lives now. In the intervening period, the banks went through a period of enormous and perhaps with hindsight relatively unhealthy growth, which culminated in 2008 with the crash. And with that came actually a really quite seminal moment. At that point, we really started to question the concept of trust, and particularly trust in the financial services sector. Perhaps the biggest casualty of 2008 was Lehman Brothers. And perhaps not by coincidence, around about the same time, I think it was about 2 months later, Satoshi Nakamoto wrote the now famous paper, Bitcoin, a peer-to-peer electronic cash system, was the title of that paper, with the focus being on creating a system that would allow the passing of payment from one person to another without ever having to go through a financial institution. And really challenging the norm that had existed, still exists in so many ways. At its heart, the paper described the creation of a platform and a network that would allow trust to be decentralized and effectively cut out all the middlemen and women that operate in the process currently to establish trust. In fact, a direct quote, and I think it's the first line of that paper, reads, "A purely peer-to-peer version of electronic cash would allow payments to be sent directly from one party to another without going through a financial system. Incredible, incredible. So the concept of this paper really challenged the very steps and processes that many were now questioning following the crash. And it started to look at the alternative. Think of the process right now. When we transfer money, yeah, we do so digitally, but we're required to go through a range of checks, validations, ledger entries across many servers, multiple inputs and outputs to confirm that that money has indeed been transferred. Records are updated, and in turn it takes an incredibly long time with many, many different processes in between. In fact, in 2014, The Economist estimated that it costs us $1.7 trillion for that privilege to go through all these steps and stages and to have trust and provenance authenticated. Today, the principle set out in Nakamoto's paper is still hailed as one of the most groundbreaking technological developments since the internet and since Sir Tim Berners-Lee set us on the digital journey. And given the economic and societal backdrop, it's perhaps unsurprising that this concept is now challenging the whole principle of centralized trust. And so blockchain was born, the ability to create trust across a network, therefore ensuring authenticity, cutting out all of the middle processes, to create a process to check, validate, and confirm ownership, authenticity, and provenance. Now, before I go on to talk about the opportunities that such a network can open up, and appreciating we're a broad church, we're probably from many different parts of the ecosystem, I thought it'd be worth just trying to decant specifically what blockchain is. And I'm a pretty simple guy. I come from the country, and I'm not a technologist, so I kind of need to break this down into sizable chunks. And there are four components that I always anchor back to keep me right and keep me sane on what a blockchain actually is. In its simplest form, a blockchain is purely a database that's stored across a number of computers. And those computers are networked across the internet. It's distributed. It's not owned by one company or one person, number one. Number two, at its heart, the blockchain is public. So again, not stored, effectively democratized. Now, of course, we do see private blockchains coming to emergence amongst particular specialist groups, but at its heart, the core principle here is that it's public. Number two. Number three, think about when something passes through that network and the ability for that network to confirm the authenticity of that item passing through the network. As that network grows, the ability to scale that trust and that checking unfolds. Number four, it's always online, it's always synchronized. That network speaks to each other, speaks to each component continually. So it's always updated, it's always refreshed, it's always synchronized. So those are the four components that I always come back to when I think about, well, what actually is a blockchain? And in joining all those four bits together, what you effectively create is a single version of the truth. A single ledger, a record, a database that's unified, updated, and verified across a trusted and very secure network. So if we fast forward a little bit, and again, this is perhaps when I start to decant the four elements. These are the three sentences that I always anchor back to, and that we bear in mind as we go out and we think about the application of blockchain. So number one, it's secure and distributed ledger of information. Okay, secured through cryptography and complex algorithms that are shared around the community. It's distributed. It's across a range of PCs that are networked around the world. Secondly, it's a shared and trustable source of truth. And again, the scale of the network here really, really helps to compel that trust. The bigger the network, more validation and authenticity sits within the network and therefore further fueling our ability to trust it. And third, it becomes a platform for representing and exchanging things of value. A very powerful platform where we can exchange Bitcoin, we can exchange contracts, we can exchange our ID with parties we're linked into. And we can do that safe in the knowledge that that ownership, that value, and that authenticity is being confirmed at every stage by a distributed network. And in turn, taking out the many middleware processes that we see across a range of interactions designed to confirm that something is what it says it is. So, as we go through today, I will always be checking back to remind myself specifically what a blockchain is. Many of you out there will be very familiar with it, others won't be. But this is my way of trying to really decant and make it digestible as we start to think about its various use cases. So as we think about the concept, I'd like to introduce to you the blocktopus, which we affectionately call this picture. I'm not sure if that's trademarked yet, but actually Ross Laurie coined the phrase, so I can't claim it, but I'm going to claim it. So here's the blocktopus. When we start to think about distributed networked blockchain examples, there are many, many use cases that start to build up. But if we just turn our minds to imagine a world where actually payments identity or asset ownership is confirmed, tracked, validated from beginning to end. In insurance, for example, imagine a world where you're able to establish a digital asset register where you can store and update details of goods or property you own. And every time that's validated by the merchant that you buy those goods or services from. Think about how this could enable real-time pricing of premiums. So every time you either lose an item or upgrade an item, it can be confirmed instantly, and your premium could be reflected in the pricing of your premium. Imagine how it could support the automated management of claims in the insurance business. And also think a little bit about how it could effectively eradicate fraudulent claims. If your insurer always has a trusted source of digital proof of assets, then actually you can think about a world where fraud is completely removed from the process. Going slightly left field, think about the management rights and authenticity of music lyrics, or indeed melodies. There's a band in Canada who have now codified their melodies that they've written in many of their songs, uploaded them to the blockchain, and have a digital record that they own that melody. So if ever they are facing an action where somebody is claiming that it wasn't original, they can look to that trusted network and that source to confirm that, no, actually it was. They wrote that lyric, they wrote that melody, it's therefore theirs. So the whole performing rights aspect and payment and control of IP will absolutely be revolutionized by something like blockchain. We actually did a blockchain hackathon last week in Dublin, and one of the teams created the ability to track the provenance of whiskey via the blockchain. So for export overseas, at any point, the buyers can be very, very clear on where whiskey was distilled and the process that it had gone through and confirmation of its age, et cetera, et cetera. So you start to think about the concept of blockchain and how it can really be used to track provenance and trust, and it becomes quite incredible. What becomes even more exciting for me, the subject of a whole other session, is when you start to think about how does this interact with new FinTech technologies. So if you start to think about how AI plays a role alongside the blockchain, if you start to think about how robotics could compel some of the processes that sit alongside blockchain, it becomes incredible. We're also looking at how we interface blockchain with the Internet of Things. So you can effectively join up many, many parts of a process or a step in many different industries in which we all interact with. But as I say, that's a whole other session. So yes, there are still some questions around blockchain, of course, and we'll dig into these a bit later on this afternoon. We must always remember the use case. You know, just because you put something on a blockchain doesn't mean it's suddenly a great process. A bad process will still be a bad process, even if you put it on a blockchain. So we must always remember the use case and the challenge we're trying to solve. But we must build and try. We must try and fail. We must start again. We must keep going with starting to bring to life some of the really exciting proof of concepts that we're starting to see come onto the market. And it's at that point will really, truly understand the depth of opportunity we have with blockchain across many industries. So against that backdrop, against the backdrop of the Blocktopus, I'd like to hand you over to next speaker, Bruce Pond. So Bruce is the co-founder and CEO of BigChainDB. Fascinating, we talked over dinner last night, fascinating organization, doing some amazing things. Bruce will start to take us now down into the next level of detail here in some of the use cases. So thank you very much.